Good morning, everybody, and welcome to today's event where we have the pleasure to present NNIT. To help us through today's presentation from the company, we are helped by CEO Per Voss and CFO Pernille Fabricius. Today's event primarily covering the Q2 results. If I should take a headline, and actually in general, maybe from some of the other Danish IT consulting companies, a little bit slower growth than expected, but actually what I hear from also you and the companies is that you expect that to be a temporarily item. So that will be very interesting to hear a little bit about. As always, do ask questions during the presentations. We will wait until after the presentation to ask them, but do not hesitate to ask any questions. Do that in the box down below, and I will make sure we get everything caught up in the end. And as always, do feel free to ask it in Danish also. I will translate it to the best of my ability. But for now, Per, I think I will handle the presentation over to you, Per.
Thank you very much, and welcome everybody, and thank you very much all for your interest in NNIT. Me and Pernille look forward to guide you through our Q2 financial, and of course ask whatever question you might have. Looking at Q2, I think it's fair to say that it was for us a truly transformative quarter and actually a transformative H1. I mean, we announced on June 22nd a big decision for us in our world, which was the divestment of our infrastructure business. And that actually means almost half of our business. And I will come back to a little bit more, give you some more flavor what this really means to us. But both me and Pernille are also at the same time proud of that we in parallel with this managed to keep our focus on business as usual. Because in parallel, when you invest a lot of time to make such a transaction possible, you have your customers, you have your people, you have all the other stakeholders you need to take care of. And I think the most important one is, of course, our clients. And I think the big proof point that we are increasing our backlog is one of the things that I'm maybe most proud of. I mean, we are active in the market. We are successful by winning new clients, where you can see actually backlog growing. Also, in parallel with this big transformation, we are doing another quite big transformation of our company in moving all our global delivery capabilities from China to the Philippines. This is a big project for us, encompassing almost 400 people out of our 3,000, so it's on more than 10%. And that project is progressing according to plan. At the same time, we are not pleased by the financial numbers. Part of it is expected due to that we have our NNIT contract with Novo Nordisk on infrastructure that was expected to impact our growth. And we also had a lost client from last year, which will also affect this quarter. But part of it is actually not expected. We touched upon it in the first quarter that we have some more temporary bumps in the road that hit the first quarter that has also affected the second quarter, and we will come back to that. But then looking about the transformation, I mean, what this really means to NNIT is a big change. We will go into kind of a full service IT house, into specialized IT services providers, focusing on primarily life science and our digital consulting business. We will also be a much more international company, which are almost entirely focused on the life sciences market. And that is a market where we expect a lot of growth going forward. There is a lot of projects ongoing, and there is also part of the life sciences market in maturity regarding to technology, meaning there's a lot of catch-up that needs to be done in order to make that happen. So we see this as a way to accelerate the growth and also boosting our profitability when we come as a new company. We have announced the merger or the divestment. But a lot of work remains to be done. I mean, we are now in the first phase of this process, having a very constructive dialogue with the clients, and that is positive and following the plan. But the next phase is, of course, a separation, because we are basically going to split our company in two, and there's a lot of things that needs to be done to make that happen. We have established our legal entity, but that's just a small step, and there's a lot of other activities that will continue throughout the year, and we expect to have this completed towards the end of 2022. Regarding the bumps in the road, one way to look upon that was that actually primarily hit our life sciences business, which is where we are growing. And on that topic, we took a strategic decision because we saw the demand picking up versus Q2 and especially towards the second half of the year. Therefore, we decided to maintain the majority of our delivery capabilities. Because when you hit such unplanned decrease in demand, you basically have two options. Either you reduce your capacity or you keep it for the future. And of course, during that period, do a lot of things. We develop your service offering, go out to client and stuff. But in theory, you are keeping those people. And in this case, we kept our people to a very large degree, meaning that we had idle, unutilized capacity during the first and also part of the second quarter in order to take opportunity of the growth we see happening in the second half. And we also saw happening towards the second quarter. But we did some reductions, both in overhead resources, but also addressing some of that idle capacity in order to increase our utilization numbers. Looking on the clients, of course, I need to touch upon the big contract with Danish National Bank. I think that it will be, and it definitely is this year, the biggest IT contract in the Danish IT market. It's the value, the total expected value over the 6-year period is almost 1 billion. And we've started that transition project in a positive way, and it's really a really big win for us. A more smaller but still very strategic win is with the Danish Health Data Authority. It was a very highly competitive bid where we will provide services to very, very sensitive part of the public market, which is a proof point within our capabilities within security, which is really, really good. Regarding then the strategy execution, we will be a company that will continue our focus on M&A. Coming to this company as a fairly new CEO and having worked quite extensively with M&A, I must say that I'm very impressed by the way that this company execute the M&A journey and how we integrate this company into the family. And looking on the financial performance of this half year, this quarter, and also the last couple of years, you can see a very, very good performance within our group company. They are growing and they are really delivering up on the promises. The last thing would be about the life science market. We do have now, thanks to our organic growth and also thanks to our acquisition, a complete service portfolio addressing the need for technology and IT within the pharma sector. This is a sector which has a technological depth where they need to carry out a lot of projects. And one area that is specifically growing, not just according to ourselves, but also according to many of the analysts like Gartner and others, is production IT. Because the pharma company is undergoing quite a big change now in how they produce their drugs, where there's a larger proportion of drugs which are personalized to you and me to be much more effective. And that and other things mean that there's a lot of investment now going into the production of drugs. And here our mergers with Asset Control in 21 and Prime for Services in 22 makes us a real big player within this niche area on the global scene. So in this specific part of our service offering, we are addressing the big pharma companies, but also the mid-sized companies. So we are in a good spot. The pharma industry is expecting to continue to invest a lot, and thereby we are well positioned to create organic growth as well as continue our M&A journey. With that, Pernille, I hand over you to shed some light over the financials.
Absolutely. Thank you, Per. So if we start by Life Sciences Solutions, we had in the first quarter a sort of more difficult quarter, and and had guided that that would pick up in Q2. And that we've actually seen. We have seen a pickup. It is a 33% growth within the segment, and almost 4% organic. That is not the level of previous fortunes, and we also expect that definitely to improve. It is impacted by some cancelled US projects in Q1. We saw that, and some slower than expected sales. As Per alluded to, the capacity utilization has been lower, but that's also due to the fact that life sciences internationally is a growth segment. So it would be not right to adjust capacity for a bump on the road, since we are expecting growth going forward. The order backlog is up positively 10%, and that's on the back of the M&A. Turning to the cloud and digital solutions, there we saw a slight decline in revenue to 206 million. And we saw sales to public customers decrease from, however, quite a high level. And that was not fully offset by moderate growth in other groups. Here, capacity utilization remained low after the postponed ERP implementation project in Q1, combined with the lower sales. So gross margin fell to 9.1%. We did here take a step to reduce capacity, which will have an impact in the second half. The order intake also here, as Per talked about previously, has shown a really positive trend, and that's also the same within the life sciences segment. Moving to the hybrid cloud solutions, which is by far the one that we are going to divest of, plus part of the CDS business. Here, the performance was exactly as expected. We had a declined revenue, and that's basically due to the fact that in 2021 we had a renegotiation of the Novo Nordisk contract, so it was all expected. We continue there to reduce production costs, but of course a revenue decline like this does have an impact on gross profit, which was reduced to 2.5%. We are working to improve the utilization rate by lifting sales and further reduce costs. We saw here a very, very good order intake, not only through the Danish National Bank, but also others. But the Danish National Bank, of course, impacts this significantly with a contract worth 1 billion. Moving to the group financials, these have, of course, all been disclosed in our Q2 results. And you can basically see that we are showing a reduction in the organic growth of 6.8%, but have basically an overall increase in revenue. In Q2, the gross margin fell to 9.1%, and that's due to the higher cost and the slower sales compared to expectations. And we had a negative operating profit margin by 1.5%. The logic behind the split of the business can actually be seen to the right, although on smaller numbers, with the life sciences piece constituting 31% of revenue, but 63% of gross profit, and being basically the growth area for the going forward. We also in the quarter had special items. They related primarily to the very large projects that we're carrying out, which both have to do with the splitting of the company and the change of the offshore solution that Per talked about. With all of this happening, going to the outlook of 2022, we maintain the temporary suspension of the guidance. We are making very good headway on the customer dialogue with regards to our sale of HCS. And when that is basically finalized, we are going to take up our guidance for the year. We are going to, at that point, split the financial reporting to the discontinued and the continued business. And with that, we are going to definitely have a very sharpened focus on the two core business units for the going forward to strengthen revenue and profitability from 23. With these words, Per will provide the closing remarks.
Yeah, just a few words before opening up the question. I think during this quarter, I think we laid the foundation for a future profitable and growing NNIT. I think that we are especially pleased by the order backlog growth and all the wins across our business units. And also we are pleased by how this process with splitting the company is progressing so far. Not hiding that a lot of hard work remains, but I think this has really been a transformative quarter, and we really look forward to the future. So with that, maybe opening up for questions.
Yeah, perfect. Let's start with the first one. That was, as I remember. There's a question here. You maintain your suspension of your guidance. I do understand that maybe some of the moving parts are still out there, but is that the only reason? Are you also a little bit more uncertain about the future? So you want to have a little bit better picture, just to divide it in, or is it solely because you still haven't, split the company and know which parts will end where?
So this is, I'll take that. This is completely due to the fact that we are basically in need for customer consent to make this carve out. And there are different routes to this without becoming too technical that will impact the view to the future company as well as the company that will be discontinued. So it doesn't have anything to do with uncertainty. That process, as I said, is running super well. But it is, we just announced it the 22nd of June, and there was a summer holiday there. So we have to have that sorted to be able to basically, get this right financially.
Perfect. And then there's a question. I know you say it's temporarily, so of course not. But there's a question here. The slowing of growth also in the divested part, can that affect the price you will get, or do you still hope, or are you still aiming for the high end of the price range that you are? So the prices.
Good question. Yeah. So good question. Well, we just, as the important thing to note in what we just presented is that we talked about that HCS is performing as expected. And that's the guiding light for price as well. So there's nothing there that makes us shake the handshake.
Perfect.
No,
Perfect.
it's fine.
And then there's maintaining your capacity or running this low gross margin or under absorption there. Does that imply you have a good visibility going into the second half? Do you see projects coming? So is that why you have accepted that? I know you got a little bit of capacity, and there's also a question about that, so you can look at it from both sides. But in general, the visibility going into second half and what you need to produce, would you still call that good? And that's why you have kept the...
No, I think it's a very good question. That's probably one of the tougher decisions you need to make when these things happening. And I mean, but we are confident that we take the correct decision to maintain large part of that capacity, and we're strengthened by that. We see a pickup towards the later part of the second quarter. So we are confident, but there is no guarantees, so to speak. But of course, our plan A is that we see the demand coming. We have the projects, and we expect them to come in. So that's where we are right now.
And then there's a question, there's been a lot of discussion in the IT world whether a lot of demand has been pulled forward under the COVID crisis. I know other companies probably than you have maybe been affected more, have had more pulled forward. But do you actually see some of this a little bit slower growth, maybe being that some demand had been pulled forward and now maybe the necessity to do something fast is a little bit lower now, where we expect the world to normalize more after the COVID-19?
No, I mean, I would say the answer to that is no. But of course, there has been a lot of turmoil in the world during the pandemic. I mean, a lot of things needed to happen extremely fast due to the changes we're in, meaning that other projects needed to be postponed. And these postponed projects, some days need to be done. So we see a backlog that are materializing. But so if you look on was pulled forward 2021, and that would have effect today, we don't see that. But as you all know, there are new stuff coming into the world right now. We have war, raising inflations and other things. So there are new uncertainties coming in that might affect the future. But it is not affected, I would say, to any significant degree that there was project pulled forward. That I wouldn't say.
Perfect. And then there's a question here. You both had a cancellation, if I remember correct, and probably also some postponement by customers. What are you seeing most? Is it postponement by customers, thinking a little bit longer about having to deal with all the problems you already mentioned here also in the real world for their business, meaning that there's a little bit longer sailing, or are you seeing some cancellation or fearing that if you can give some a little bit color on what you're seeing in the market?
Yeah, but if you take for us the big three project that was affecting especially our Q1, but also partly our Q2 numbers, if you just to give you a flavor, two of those projects will definitely happen at the later phase. One of the project was cancelled. And maybe that's just a kind of some numbers to have in mind, that there are some projects that are cancelled forever. They might reappear in a new shape or form down the road. But two of the projects are actually, they will be carried out, but they were stopped probably due to some of this insecurity that was happening during the pandemics, because as you know, not all industries were flourishing during pandemic. Some were having big difficulties, and those there could be those kind of effects.
And looking through your customer base, both for the continuing business, maybe the most, how do you see it, affected by slower growth, economic uncertainty, or are you more in stable businesses? I know the answer, but probably with the pharma part, but in general.
I think you can, if I start, and then I think you can divide it into three different categories for this business. You can say the international life sciences. You definitely see that there's an intake of customers, and it's getting stronger. And maybe there is a sort of a slight sort of slowdown, but it's not for a small company like this in a big ocean. There is a lot to go for. So doing it right with the right references and everything, you can really grow there. If you take CDS, it's more like a red ocean. It can be, their growth can be hampered, and we see also there that the customer intake is you need to fight for it more. And then when you have HCS, basically you see there that that's all dependent on delivery. So you see there that there are quite some large clients coming in now. Maybe there was a bit of a slowdown last year, at least we saw that there, but that's actually quite picking up. And that's all about a good delivery and a solid company.
Yeah, and just a related flavor to that is also the question regards also renegotiations. And I mean, I see us when we renegotiate our contract, we have a very, very strong focus to make sure that the contracts at too low margins are increasing their margins. Otherwise, we actually could imagine to step out of it, because we are interested not in just in growth, but on profitable growth. So we see many of our bigger new contracts, when we renegotiate those, both in our infrastructure business and the rest of the business, that we have better margins.
And actually, the next question is maybe a little bit relating to that. You're doing a lot of stuff, and I guess you also, everything else, expected to see a little bit earnings pick up by all the efforts you are putting in. I know it's still early phase, but I guess maybe the question is here, if I ask you as a dumb analyst, are you seeing underlying, if you look away from the under absorption on the gross margin side, are you seeing any underlying effect of all the tasks you put out to increase earning, or is it a little bit too early? And the question is also here, when do you expect to see most of this coming into your books of all the products you're running to get the earnings up or the earnings margins up?
So personally, I think it's a completely fair question, but there are a lot of moving parts. If you just look at it factually in terms of profit generation, you can say that the business that we divest of is, of course, not the sort of highest profitable part of the business. So with that, so just factually making that we dispose of a different type of business than the consultancy. So that will that will have an impact. Then the moving from China to the Philippines will also reduce the cost base just from a pure fact that basically the salaries are at a different level there. And then you have the right sizing of the company subsequently to the divestment. So there are those three different factors that are going to impact us definitely for the rest of this year, but also into next year. So if it's sort of asked, when can you expect that you are through with all of this, those three elements, I think we are looking into half year of 23, but please.
No, I mean, we also elaborate that when we present the result, and also some interviews, so a lot of questions about that. And yeah. I think given where the transformation we're in, I mean, there's a gradual uptake in our performance happening, but that means maybe we plan to reach where we want to be on the month-per-month basis by mid-year 23. But that means the full year 23 will not be what good looks like for us, but it's more that when you go into 24 that you will have the full year effect for the entire year. That's kind of where, but it's not a big bang in mid-year 23. It's going to be a gradual performance, but of course the numbers will be very different when we are a company without our infrastructure business. That's for sure.
Perfect, thank you. Yeah, now there's actually a question, going the other way around. Here you had a lot of capacity and having an idle expressing the gross margin, but you're still doing some capacity reductions. Is that because, is that only in the business maybe where you are seeing that this slower economic growth out in the world might impact you and trying to be a little bit ahead of it?
I mean, it's also a very natural question. It's kind of the contradiction of the IT industry, because this industry has been growing above market, if you take the broader view of the industry, for the last 20 years. But at the same time, you see many of the IT services company, even startup, doing cost reduction. And then you might ask, how is that possible that you're in the growth market and you're reducing capacity? And I think one explanation for that is that this industry is very broad in terms of competencies, and the demand is also differing. So if you look at the lower level, there are areas within our business that is growing a lot. And there are actually other areas where you don't see such a big growth. So then when you see a demand reduction, you might see that in some areas, that will take a very long time before you can, get the right capacity utilization of some of the idle capacity. And then you reduce that to focus the growth of the area that is actually growing. So I think you will continue to see from us and other companies that we will, from time to time, reduce capacity, even though there's a greater demand than supply. But that's kind of the contradiction.
Yeah. Perfect. And then the final question, and a very relevant one. Oh, sorry, that's not up for me. When will focus be 100% back on getting new customers, not renegotiating, the deals and the divestiture? You haven't used it as an excuse. I like that, but it must somehow have affected also your growth. So when do you expect, to have, let's say, almost 100% focus back on the existing or the continuing business and not having to spend some strength on taking the business apart?
I would like to tie that question to what I elaborated on earlier, that we will be a very different companies going forward. Because in the infrastructure business, we're talking long contracts, very large contracts, some even up to 1 billion, meaning that you need to focus a lot of time and efforts to win those renegotiations, otherwise you will be in a bad place. Now, in the new NNIT, our new contracts will be smaller, and there will be less of renegotiation of a contract as it is in infrastructure, because when the contract ends, it will be like a new business coming on. So we need to be more agile and a more consultancy-like driven company. So that means that the importance we put on renegotiation an existing delivery, that will be to a large degree gone in the new company setup.
Perfect. I think that was the final question, and we almost caught it in half an hour. Thanks both to you, Pernille and Per, for taking us through, and thanks for the listeners to listening in and having taking a very good through a lot of questions. So everybody have a nice day.
Thank you very much. Thank you. Bye-bye.